Welcome gamers to the first episode of Around the Shitcoin. So, if you thought the editing of this video was going to be as good as my intro, sorry to break it to you, that's not going to happen this time around. That was an amazing intro made by my friend. Thank you very much for that. And hopefully I strive for that quality of content in the future. But until I get there, we're just going to hang around and focus on the data, focus on the charts for today. All right, so what is around the shitcoin? Well, it is a show where I go over my trades, what I'm looking, how I perceive what the market is doing, patterns, any way we can possibly get ahead of the market and make a profit off of whatever shitcoin we feel like trading. So wait, you must be asking, what is a shitcoin? Well, everything's a shitcoin. Bitcoin's a shitcoin. The US dollar is a shitcoin. Nothing is safe from being a shitcoin. Anything and everything is a shitcoin. Some coins are shittier than others, I'll give you that. But everything's a shitcoin and nothing is something we will not try to make profit off of. So, what am I looking at currently? What is this? If you are new to trading and you are seeing my screen right now, you are seeing a bunch of colors of nothing, of jumble, and hieroglyphs. Alright, so what I am currently using is an indicator package called Market Cipher, available at marketciphertrading.com. I am not shilling it because I am not an affiliate. I do not have an affiliate link for you. Um, this is just an indicator package that I use to have confidence in my trades. I have everything open right now currently, all four parts of the cipher because I am on a low enough time frame to where I can see what is going on, but you can disable them as you please. So we're going to turn off market cipher support and resistance for now. And I'm going to go into my current trades. So my current trades that I'm in for today, and I have been in for a while. Let's see how long. I've been in them since around here, I'd say. 13 hours I've been in these trades. Not too long, not too short. And as we can see, my profit for today is definitely in the hundreds, and this is actually after a daily close. And if you did not know, when the daily candle closes, all the profits that I had the day before that candle closed, so within these 9 hours, all of my profits is no longer logged on this screen, so the profits are a little bit more than that. I'd say roughly about $5,000 worth of profits are currently locked in, with another couple hundred in unrealized profit. I'll look at taking more profits later, but I'm currently locked in this trade with a stop loss. And I will be going over trading techniques, tactics, strategies, whatnot throughout this shitcoin series. The current assets I am trading are Ethereum, Bitcoin, and XMR. This is a great example of my favorite shitcoins to trade. I am very fundamentally invested into Ethereum, as you can see is my biggest position currently after taking a lot of profit out, mind you. Bitcoin is a close contender that I am usually always trading, but as you can see, Ethereum is being traded perpetually, inverse perpetually, whereas I take my profit in Ethereum. I actually earn or lose Ethereum through my trades, whereas with Bitcoin, I'm trading it with a US dollar tether pair where I earn my earnings in US dollar tether stablecoin rather than Bitcoin perpetual. Another coin I am trading is XMR, which is a privacy coin. I'm trading it for its value. Obviously, I'm not going to trade it perpetually from an exchange. That would be kind of weird, I think, personally. But I do have some that I buy off dexes as well, and I got them in cold storage and whatnot. If I'm speaking jargon to you right now, you probably haven't been in the crypto space for very long, and I might have videos in the future going over explaining all of that jargon and lingo. However, this is not that video. So, how did I get these profitable trades that I'm in currently? Even though I missed the initial pump, how was I still able to get in on it confidently and make money? In fact, these trade setups that I'm currently in, it is impossible for me to lose money because I have a stop loss in the profit. If the price were to dump straight back down, this stop loss level would stop my trade out above my entry position, meaning it would close the trade in a profitable position. And I can actually raise this a little bit if I want more of a buffer because of fees and all that. But since my leverage is low, fees are not that big of an issue here. So let's go back to how I entered these trades and why I entered these trades. How was I confident on such a pump to jump in on it, not thinking that I missed the move? So I was asleep. Oh, actually, no, I was working because this was around 7 a.m. So I guess I missed it. Didn't look at the charts in the morning when I woke up, and it bounced off of what I call a weekly Fibonacci. I don't just call that because that's exactly what it is. Fibonacci retracement tool. These are percentile based horizontal levels that coincide with the Fibonacci sequence, which is a mathematical sequence. And I drew a Fibonacci retracement on the weekly charts, on the weekly time frame, and I came out and marked those levels indefinitely as weekly Fibonacci levels, and they have been very good to me as levels of support. So as you can see here, the price came down to the level, held it as support, went below it for a little bit, regained it as support, and gained the confidence to pump off of it. So how did we know this was going to happen, and how did we have the confidence to continue to ride this up? And I did that through, I'm on a low time frame right now, the 10-minute, and I can see using the Market Cypher Bravo or Market Cypher B oscillators down here. And without getting into a tutorial on how to use the oscillator package, which I might do in the future, I can tell this red wave and this green wave represents money flow index. So it's actually the amount of transactions occurring on the asset. And I could tell that here's a zero line in the middle, that the money that was in the negative was coming up into the positive. So money flow was increasing. We had an oversold momentum trigger wave with increasing momentum in the market, constantly getting higher, and the RSIs, the stochastic RSIs in the middle, increasing in strength. RSI means regional strength index. So with all of those combined, it was looking pretty good to at least make a scalp, a small trade, a small move to the upside. So by the time I got in, we were already thick in the green. So how did I have the confidence to add to my position on an overbought oscillation? Well, I did that because the RSIs were strong. The momentum looked strong even though it was overbought. I was thick in the green for money flow, and we have been in a bull trend recently. And I had higher confluence on higher time frames. On the highest time frame, by the time I entered, money flow on the 1 hour time frame, a more significant time frame, was coming into the green from the negative. The RSI was skyrocketing, and we still were not overbought on the momentum. So I was more than happy to believe that this trade had more in it, and I still think it does. I don't know how much. We're gonna have to find out, but that's what led me to having the confidence in jumping on to this trade. Now, if I go back to the 10-minute, what am I seeing right now? 13 hours later, right? I'm seeing money flow coming out, momentum going down, RSIs going down. These are all bearish indicators leading me to think that the price is going to decrease. And if I go onto my oscillators on the higher time frames, I can tell likewise momentum seems to be overall coming down, money flow coming down. So we're probably going to see a decrease here in value. But that's on the 1 hour. If I go onto even higher time frames, there is some wiggle room to continue up, especially with the DBSI increasing on many time frames. As you can see here on the candles themselves, this point-based system is increasing 14, 17, 18, continually giving more bullish strength to continue upwards, along with some not the best amount of buying power apexes happening on momentum. I believe there is enough wiggle room to get a few more limit orders out at better profit margins before we see a bigger correction in the market. And that's really what led me to the confidence in these trades that are currently pretty profitable for me, right? I mean, if all of these trades come back down, get stopped out in the profit, I'm going to walk away with $1,000 today and be happy about it. I'm not going to cry about making profit, and you shouldn't either. There's always the next opportunity to trade the next shitcoin, and I hope that we're going to make this money together and come out on top together. I'll see y'all in the next one. I think that's enough for the first one to kind of give you an introduction on what I'm doing here. Catch you later.